we've got the panel discussion, the experts panel, investment and development drivers in Dubai, understanding the challenges and maximising the opportunities. I'm going to jump straight into this and welcome our panellists and invite the 5 of them with very different perspectives to join me on stage now. First of all, Engineer Duar Dablan, Senior Deputy Director, Real Estate Investment Management and Promotion Centre at Dubai Land Department. Join us, please. Thank you very much indeed. Come and have a seat here if you would. Nice to see you. Thank you for being with us. Also, the legal perspective, Philip Caulfield-Smith, who's a partner with Pinsent Masons. Join us, Philip. Thanks very much indeed. Tim Rose is Head of Real Estate at Emirates MBD Asset Management for an institutional investor's perspective. Tim, looking forward to your insights and some insights from your MBA thesis, which I know you've recently completed. Then we have the banking perspective, absolutely critical. Please join me in welcoming Ronan O'Dowd from Standard Chartered, heads up real estate banking for the Middle East and Africa. And finally, of course, wouldn't be complete without a developer. Please join me in welcoming Tariq Bashalat, the Executive Director of Strategy and Operations at MAG Property Developments. Tariq, thanks very much indeed. We're looking at drivers. So what are those drivers? Well, we've talked about them this morning, haven't we? Various different categories. There are financial drivers, there are demand drivers, there are macroeconomic drivers, there are a whole bunch of things going on. Regulations are important as well. And those are the things we're going to look at, okay, the drivers today. So frame your comments and questions, if you would, about those. And my list is by no means the definitive list. But Engineer Duar Dablan, can I start with you? Sure. From the regulatory perspective. You say that the whole point, the driving thesis for the Land Department was to make Dubai a preferred city for investors, indeed for the real estate community, and everything you do in terms of regulations and some of the initiatives is all based around that. Tell us how that works.
Sure. First of all, thank you.
I don't think that microphone's on, is it? Can you hear?
I can raise my voice. Oh. Thanks for inviting me to this amazing discussion panel and, of course, the conference. Let me start with why do we have an investment promotion center in the Land Department? Our main goal is to make Dubai the preferred city to live in and to invest in. How do we achieve this? If you remember, during the financial crisis where the whole globe was suffering from this, we at the Land Department thought how we can move out from this crisis, how we can attract investments, whether local or foreign investments in the real estate of Dubai. So we thought to have a dedicated investment promotion center which can achieve this. Basically, we have qualified people who studied the market and identified who are our stakeholders so we can attract them to Dubai. So we start with our vision is to attract the local and foreign investments to Dubai. Then what we have done, we studied what are the requirements, the demand of our stakeholders, starting from the government, starting from the developers, whether they are master or sub-developers. We have the investors, individuals and corporates, the banks and financial institutions. So we took the feedback from all of the stakeholders and then started making a very ambitious and detailed plans. What we have done so far, we launched different programs. These programs attracts different types of investors. For example, one of the programs that we knew it is very successful one and currently working efficiently is Tanmiya program. Tanmiya means development. If you notice that there are some distressed assets in Dubai. So what is the government role to revive these assets, to protect the investors? What we have done so far is as a government and from our study, none of the global or international government have done this. We intervened with the existing developer. We tried to find or attract a new investor or developer to take over these projects. What we do, how we support the new developer by giving the right information, authenticated one, preparing financial report, preparing the technical report, check what are the legal issues around the projects, and even supervise the draft agreement between the existing developer and the new developer till the complete handover is being done. Plus, after the handing over or after the new developer take over the project, what we do basically is to monitor the progress. We work closely with RERA to prepare the technical reports and make sure that the project is developing. So this is one of the programs that really had attracted lots of investors. We regained the investors' confidence in the market. Plus, recently we won a Dubai Government Excellence Program from Sheikh Mohammed for achieving amazing results under this program. Of course, we have other programs. Maybe during the discussion we can talk about them.
I think you might get quite a lot of questions. And in fact, one of those repurposed distressed assets, my wife and I just opened an office in Design District just last week, and that I think was lying distressed for about 5 years, wasn't it?
Yes.
And then it was repurposed, and suddenly it's Dubai Design District, and it's generating
and for
revenue.
this design project, we actually approached them and told them if you want to find a new investor, where they said we can able to complete the project. So we work closely, as I told you, with the existing or the new developer.
If I can turn to the legal perspective now, and Philip, you have an interesting perspective. You say, which I think we'd all agree on, there have been improvements in the legal regulation here, but we still need further improvements. And I think, to quote Craig, most of us would agree on that. But you say there's a delicate balancing act. For example, light touch regulation versus more robust regulation, or investor protection versus developer protection, and sometimes they conflict, don't they?
Absolutely. It's a very difficult balance to get right. And I mean, I think, firstly, to put it into context, the legal framework is one of the key investment criteria that an investor would look to when making a decision to make an investment into a jurisdiction. And I think it's widely acknowledged that Dubai is the market leader across the Middle East in that regard, in the context of the fact that the foreign investment market was only opened in 2006, and yet it has a very robust legal framework that's continuing to develop as the market evolves. But it's obviously competing against other international markets for such investment. For example, London, New York, and Singapore, all of which have had substantially longer to mature their rules and regulations. So yes, it's done incredibly well in the time frame that it's encountered, but there's still significant improvement.
So Tim, if I can turn to you, Tim Rose from Emirates MBD Asset Management. You say this market needs more institutional investors like yourselves, patient capital, not speculators. Fine. What have you heard from either Dua or Philip just now that convinces you that institutional investors will be convinced? Because there aren't many at the moment. There's you guys and there's Emirates REIT, and there are others, but there aren't many, certainly international institutional investors in this market yet. What are the drivers they need?
Yeah, I very much think institutional investors are interested to be here, which would obviously be a big benefit to the Dubai market. Most of these institutional investors are long-term, strategic holders, quite happy to have 5-10 year horizons and go through the ups and downs. So there's a big benefit there to have additional investors coming through. Look, one of the biggest challenges is just having the stock available for these institutional investors to seed their funds or seed the REITs and then be able to expand upon them. Obviously, one of your biggest demand from investors are kind of Sharia-compliant investments as well. So that takes out quite a large proportion of the properties that are already in the market. So, look, Dubai's been really successful in terms of the developments. A lot of government-related entities have been fantastic in terms of developing property, but also creating free zones, the DIFCs, the TCOMs, the JAFSA. So, what we may need to do is to really be a catalyst in terms of this industry and to become dominant within the MENA region. I think we're probably going to need some of these government-related entities to promote REITs or funds in terms of their real estate assets, still keeping control and still aligning with what their objective is as a free zone or a business, but just being the catalyst for this region, which obviously will give Dubai some additional strengths and dominance.
Let me ask the question in a slightly different way, because you've just completed your MBA thesis on REITs, real estate investment trusts, and in simple terms, what does Dubai and the region have to do to get more of them? I think we've got one at the moment, haven't we? Emirates REIT. So what are the bottlenecks? What are the obstacles preventing more institutional funds like a REIT setting up here? And maybe if we can identify those, people like Dua and Philip and the others can figure out how to overcome them.
Look, a lot of it is the typical investor who wants to invest into a REIT is looking for income. And look, typically throughout the world, there's about 31 countries, about $1 trillion worth in REITs. And it's expanding fast. 80% of those investors are institutions. Whether it's sovereign wealth funds, whether it's superannuation funds, they need income. The issue here is in terms of just that lack of stock at the moment, and probably what you actually need in terms of for a REIT to be successful and be able to open it is probably be able to develop some of their own stock to an institutional quality at the start, or have some kind of government reliance in terms of some of those assets. But
just finally, one other point. I spoke with Jessie Downs of FIDAR Advisory a while ago. She says one of the reasons we're not getting institutional investment in Dubai is it's just too expensive. The yields aren't high enough. Office yields need to be up in the high single digits. They're not there yet. Apartment yields just aren't high enough in the mid single digits yet. And unless either rents go up or prices come down, that we're not going to get big institutional money coming in. I'm oversimplifying her argument, but that's the basic thesis.
I wouldn't agree with Jessie on that. Essentially you can buy a completed office building, net yield, pure net after all OPEX, vacancies, you can achieve 8%. Now, if you can pay out a dividend 5.5%, 6%, and that's very suitable for the local investors, but also for international investors. But then if you've got the additional focus that you can have some growth in terms of rental growth, you're probably not going to see much compaction in terms of the yields in the meantime. But the market probably is there in terms of commercial, industrial, education, hospitals. Jessie's right in terms of the residential. Residential, it's very tough to be able to achieve the 8% minimum kind of yields. But possibly with a bit of leverage, you can start to squeeze that.
Well, thank you for that segue. Bit of leverage leads us nicely to the gentleman sitting to your left, the banker in the room, Ronan O'Dowd from Standard Chartered, not just Dubai, but the Middle East and Africa. But you say that little bit of leverage might be hard to come by over the next couple of years. You think financing could be quite tight over the next 18 months?
The financing market here has been very liquid over the last 2 years. So since sort of mid-2013, there has been excess liquidity in the market. There's also, for a market of the size of UAE, there's approximately 50 banks. So there's a lot of banks as well. So, and a lot of banks chasing assets, which is what we call our loans. So that has driven pricing down, has driven structure, so security structure and covenant structures to be weaker than you would probably like in a market like this. And ultimately, with recent impacts of what's happening in the global financial markets, which is effectively a flight from emerging markets, and the sort of the surplus that was sitting in banks primarily from oil revenues, which is starting to be utilised and starting to be used for commitments that the governments in this region have made, it will end up effectively with less liquidity in banks, meaning effectively more discerning credit discussions with clients. And my view is that a little bit this needs to be a little bit of sense, and like what's happened in the overall real estate market, where there's an ongoing correction in certain asset classes. The banking market needs to relatively correct in this market also, meaning better terms, better structures, less shorter tenors for the banks. I suppose that's what I would say anyway, but I think that's what's probably going to happen over the next 12 to 18 months.
I'm going to come to the floor in a second for comments and questions. We do have some microphones that will be available. First of all, though, Tarek, the developer's perspective, it's good to finish our opening remarks with this. You work with MAG, you're the Executive Director of Strategy and Development, and from the notes you sent me ahead of today, I picked out a couple of things. One was affordability. You think that's a big deal, which is interesting. But also you say this, it's important to build what the market wants versus what is convenient for the developer. Now, I'd have thought that was just property development 101, build what the market wants, but you say no.
Yes, I agree with, obviously with what I wrote, of course. I think the key is to reverse engineer the yield play, as everyone's kind of hinting at here. And what I mean by that is, if you look at Craig's slides and you see 79,000 or 790,000, you really need to work backwards, or I need to work backwards as a developer, as a private developer, to come to a point where there is an aggressive yield being performed in the market. And you can do that with affordable. You actually can. But for affordable, again, as Craig pointed out, there's a few things that need to come into play. One is the land cost, obviously the construction cost. But if we can get around the parking and the parking requirements specifically in affordable, this can help out tremendously. And I think this is up to the regulators to work with the developers to come up with either communities or strategies and communication and linkages. Also what Craig has pointed out, to ensure to keep the costs down.
Is parking that big a deal?
It's 30% of what I built. So I spend on BUA, which includes the parking, but I sell on NSA. And that ratio can vary. So it's really, really important to be efficient with the design, the cost, and be on top of your consultants to ensure you have the right design. So in the affordability world, it's easier to do that with luxury because it's what you think everyone would want, and there are a lot of people who can tell you what the right design should be for the affordable segment, for the luxury segment. On the affordable side, you really need to work with the designer on a very detailed basis to see how you can work with the parking, how you can work with the units, how many hallways, bathrooms, walls, shafts. And I think that's really something that if you want to make a decent return, that's what it'll take, basically.
The other way of looking at parking, I guess, if we were in London or Barcelona, would be, well, you look at public transport. Would affordable housing in another big city, certainly not Singapore, would there be a parking component there? I guess possibly not. Can we take any learnings from that if it is 30% of your built-up area?
Well, either you need to offer surface parking, which is what we did with DWC, which is why that deal worked for us, and we went ahead with it, which was 13 individual buildings with low FAR, with a large piece of property, within a community element, which also is important for affordable. If it was more dense, and that's what you kind of see with the map that Craig had as well, is that you're farther away. Why? Because the parking is an issue. If the parking was somehow removed, then you can be more strategic with where you build your asset. And you can come in more into the center of town. But obviously the linkages need to be there, and the government needs to acknowledge that you get a dispensation on parking because you are near these linkages. So it's not just up to me, it's really up to, of course, we can get onto the banks as well, but the regulator and the design and the consultancy and everything.
Just before I go to the floor, Dua, if I can come back to you on this issue of master planning and all these moving parts fit together. Whose job is it to negotiate between developers like MAG and the RTA and take in the research that the guys like Craig have done and pull in all these different threads together and make sure that we get something that works? Is it RERA? Is it the land department? Where does that responsibility
We
lie?
have more than one government entity. We have, first of all, the master developer. We have the Dubai Municipality. We have Tarakhis, DIWA, RTS. So it's more than one government who is working and approving the design and what all the requirements and facilities needed to support the project. So it is not only RERA. RERA role comes when the project registration in the land department. We have also the escrow account where the developer would like to sell the units and off-plan units, basically. So he's taking the permission and open an escrow account.
Okay, thanks very much indeed. Right, very happy to take some comments or questions from the floor now. Hold your hands up nice and high because it's a little bit dark. Thank you, sir. Thank you.
Hi, good afternoon, everybody. The question to the lady from the land department. You mentioned something about an initiative to solve the problems of some stop the projects and to give the privilege for other developers. Would you please provide us with some figures about this? And what about the other projects which still stopped since more than 9 years? If I'm allowed, I can specifically mention some developers because a lot of investors are still stuck in the market and there is no hope and a lot of things about this point.
Thank you very much indeed. Just to repeat the question, it's about other stalled developments from the previous downturn. What are you doing about those?
See, the land department, through its investment and promotion center, is playing a significant role to sort out all the problems related to the distressed assets. So basically, we solved more than 40 projects were being revived. Of course, imagine how many investors were benefited from these projects. Plus, if you remember, there is a decree which was issued by His Highness Sheikh Mohammed bin Rashid to form a liquidation committee in the court. So also the liquidation committee is making its role or doing its role by looking into these projects and liquidate them. So we work both of us, like the land department and the court together to sort out all the problems. Now, in case you have any specific projects that you would like to check the status of it, it could be under Tanmiya's portfolio or it could be in the court. So what I suggest is to approach us either for the coming 3 days. We are having our stand in Cityscape, Sheikh Saeed Hall, so we can answer all your queries about the specific projects. Or you can go also to the website of the land department where you can have or see the status of this project. Alternatively, you can call us in the Investment and Promotion Center and we are ready to support you with all the information that you need.
It's a good question, thank you. Any of our other panelists want to jump on, perhaps the legal perspective?
Yeah, I mean, from what we see, we've been involved in a number of suspended projects, as you'll imagine, and the Lands Department has acted as a facilitator to try and, when it goes into the formal suspension phase, prior to cancellation, DLD have entertained and try and facilitate new developers taking over stalled projects for the benefit of, well, obviously the new developer, but also retaining the interests of the existing unit sale and purchasers. So, and we've been involved in a number of those. So that's another way that the DLD is trying to assist such projects.
It's a great question. Thank you very much indeed. Yes, please. The next question.
Yeah, my name is Ahmed Boukhash. I'm the Director of Urban Planning at Dubai Creative Clusters Authorities. We're the authority for areas such as the Dubai Design District, which you talked about. We're currently discussing an important topic, which is, again, for the affordable housing. And some ideas that are come to mind is such in developed countries where you have public-private partnerships. So actually it's not more of a comment, but more of an open discussion. Of course, we don't have time a lot for that, but I think that the problem is each entity is working in independence from one another. So you have the developer, the authority, and each one is due to that isolation. For example, the parking requirements. We understand that at the same time we have our own regulations to regulate that. But at the same time, the developers always try to remove a basement because even that basement can be compensated in a surface parking area, which in the end, as an urban planning perspective, we don't appreciate because you can say it pollutes the view of the area. You know, we always prefer it to be hidden underneath. So I think just to keep it short is if I would like to hear the feedback of the members in the panel in terms of having actually a dedicated system in which there is a collaboration between the entities, because in the end it's for the benefit of Dubai to assist the developers in building, but at the same time have regulation to support that in terms of developing the open spaces. For example, if you don't want to do a parking underneath the building, you may actually work on developing a sky bridge, maybe connecting between a metro station and a building if it is adjacent. But the whole idea of developing those spaces which are in between, that is what is lacking. And I think that kind of initiative is something that we want to develop with. And I would like the feedback of the members in that sense. And thank you.
Tarek, first of all, you're a development. I guess 2 points to pick out from there. One is the idea of public-private partnerships between TCOM and yourselves. Nice in theory. Is it going to work for you in practice? Can you sell it to your shareholders? And secondly, this idea of open spaces or public spaces. We all want them, but they're not leasable, so who's going to pay for them?
I think a partnership obviously would be great and a great idea. I think keeping it simple, where the decisions are made, fairly quickly, and there's a structure and a format. One idea that comes to mind as a developer, instead of paying for land over a 2 or 3 year period, if it's earmarked affordable housing, if it follows the right design guidelines and seeks a certain mid-income market, it would be great if the government could support the private developer with a 10-year payment plan on the land, a 20-year payment plan on the land. And that would line up very well with the banks and the investors as well, allowing us to either mortgage the property or bring in an investor, so the yields are more attractive. But the cost of land, and obviously the infrastructure would need to be there as well. So someone's got to bridge that gap of connectivity, whether it's under the ground or surface parking or access to the metro. But all of these things I think are good ideas.
Dua, any ideas on how we can do that? How we can get all these people together in a room and come up with a solution that has parking, it's close to public transport, there are nice open areas, it's affordable, the government is selling land over a 10-year period. I mean, that's a lot of heads to get together in one room,
Yes,
isn't it?
Actually, the government is looking into this matter. It is, again, it came to their attention how we can support the affordable houses. We had lots of meetings with the Executive Council. We have meetings with the Dubai municipalities and with other RTA, DIWA. So all of us are working to achieve or to plan or having a plan for the affordable houses. Now, how this plan will be executed, when it will be announced, still it is under discussion with different parties, government parties.
Thanks very much indeed. Let's move on. Question from the front here, the lady in the white jacket, please. Thank you very much indeed. Again, if you can just tell us your name and give us your brief comment or question.
My name is Huda Hamid Sangur. I'm from Bahrain. Our offices are in Bahrain and in UK, London. I wanted to mention, we have in Bahrain and in UAE and all the Gulf area the same problem, that we don't have proper plannings from the beginning. And now we are trying to sort out solutions, because from the beginning the infrastructure was not taken into consideration all of our needs, and this is the problem we are facing. Second thing I wanted to mention, which is very important, we have a missing link between the whole thing, because that missing link that doesn't give the developer to work properly with the banks and this, then we as an, even though I am in the development and in the architecture, but as individual people have the problem of having their problems sorted by having the proper houses they need and the other things. Third, which I feel we are facing even the outside look of the country. Our countries are losing identification because of not the plan properly. Very important point I would like to mention, especially to Dua, that where is the electricity and the water for all what we are going to build? We're facing this problem, and I don't know how we will sort it out. Thank you.
Dua, any thoughts on that?
Yeah. Just I want to comment on having a bridge between the developer and the banks. Actually, one of our programs called Taysir program. This program basically is working with the ongoing projects, having more than 50% of completion, where we certify the project as a land department against certain criteria. For example, the infrastructure, the experience of the developer, the experience of the contractor, the ROI, and so on. So once we issue a certificate to the developer, then this developer can use this certificate in applying for the mortgage for banks. In our portfolio currently, we have 8 banks that already signed a Taysir agreement with us, and plus we certified 44 projects. So this is one of the bridges that we already done it to support both parties, the developer, the bank, and the end users, because the end user also is allowed to facilitate mortgage if he buys in these projects.
Thanks very much indeed. I've come down to the floor to make sure that rows 1 and 2 don't have a monopoly on questions and comments. We have one comment from the back of the room. Yes, please, sir.
Thank you very much. I'm Matthew Armstrong from Dubizzle. Thank you for a fantastic panel. My question is, when it comes to affordability, you're coming up with some brilliant ideas, and as soon as it is affordable, the profit margins for investors for rental returns are very high. So when they want to flip the property, it's not going to be affordable for very long because it's too attractive for them to buy and want to flip. So are there any solutions in place to keep it affordable once it started off affordable? Because otherwise I fear we're just taking the profits from the developer and move it straight into the investor's pockets.
Maybe we can get a legal perspective on that to start with.
Well, until you have enough affordable housing in the market where it's self-regulating, the only obvious solution is to regulate. And to do that, you could go down a number of routes, potentials, for example, making it difficult to assign for periods of time, so reducing the investment potential in that asset class. Also, having what we would call key worker housing, so having to fulfill a certain criteria of worker to be able to even qualify to rent or to acquire property in a particular development. I mean, these are just some ideas in terms of regulation.
Thanks very much indeed. We're going to take one more question from the back of the room.
Hello, my name is Ben Piper from Killa Design. I really had a comment about the presentation before that showed a series of maps of a series of cities in the Middle East. And one of the things that was extremely noticeable was that these zones of affordability are very much on the outskirts of the cities. And that's pretty much, apart from the case of maybe Dubai, is pretty typical of the situation. And when you consider the infrastructure cost for the city of trying to link these populations from the outskirts to the center, and then if you also consider the kind of loss of productivity cost of the amount of people sitting in traffic, moving back and forth over many kilometers, especially by European standards, 20, 30 kilometers.
Can you get to your point, please, sir?
Is significant. So I'm just wondering what sort of moves we might see in the future from the city planning authorities in terms of mandating.
Thanks very much indeed. We got the question. Thank you very much indeed.
Mixed use.
Dua, what can we get from city planners towards making sure that all the affordable housing isn't necessarily out of town, 20, 30 kilometers from the centre? Thank you. It's a great question.
Talking about the affordability, right?
Indeed, affordable housing, the question said, it's always way out on the outskirts, 30 kilometres away, but that has infrastructure costs and wasted time costs. How do we get some affordable housing a little bit closer to the centres?
In terms of affordability, as I mentioned earlier, the government is really paying an attention how to provide or to support the demand or to fulfill the demand of the people who would like to have affordable houses by working closely with the developers, sub-developers and master developers. We have plans already. We need to know how to execute these plans and how to get support from different stakeholders, because as you know, it is not only the government who can work on such initiatives.
Ronan, the issue of affordable housing keeps coming up and the various challenges. Is it bankable? Can you take it to your credit committees and get a deal on affordable housing? Do the maths stack up?
Typically, where there's demand, the math stacks up. I suppose in affordable housing, there is demand. I think the key thing for affordable housing is making it viable for the end user. So I think one of the points that has been raised is developers typically sell to investors, and investors then sell on the units post-completion at premium or rent them. And actually the end user, or the people that you're actually focusing on, don't get the opportunity to live in these houses. So one of the areas that could be looked at is making what they do in UK or in those markets, which is sponsoring certain people through either preferential loans or preferential prices to buy these projects. Now,
perhaps, Tim, that could be an organisation like yours. You could get together over a cup of coffee in Caribou at DIFC, Standard Chartered and Emirates MBD Asset Management, and they could lend the money, and then patient capital like you could come in and buy it and hold it rather than flip it.
There's quite a bit of focus in terms of, for institutional investors at the moment, in terms of the low-cost housing. There's huge aspirations in terms of how many hotels are going to be built before 2020. There's obviously a population growth as well, which requires a lot of education to be built, schools, and there's a lot of staff related to all these types of businesses. So, they're very attractive investments, in terms of large low-cost housing with maybe single tenants, long-term leases. Also, it just enables things to probably get built a lot quicker. But to make them low cost, you need to be on the fringes. The reality is the land is lower cost there, but that's attractive for a lot of those hotel operators or a lot of those school operators as well. But it definitely is a focus for institutions.
Thanks very much indeed. We've got time for a couple more questions. Gentlemen in the middle here, and then we'll take two more from the front here. Very quick questions. Yeah. Thank you.
Hi, my name is Prakash. I work for...
Microphone higher.
Hi. Yeah, my name is Prakash. I work for a government office. I just want to ask one question with regards to affordable housing. Whereas in this part of the world, lending is directly proportionate to the employment, and employment is subject to market dynamics. So if you give an affordable housing on rental basis or on loan, what has the government done on a serious issue when it comes to job market? And because here the direct loan is proportion to the visa, and visa is directly based on the employment. So if the job market is affected, ultimately the asset has become an NPA. So how is bank going to take into consideration affordable housing when majority of the loans are going
Thank you very much indeed. It's a good question, Ronan. Only people with a formal job can get a loan, can't they?
Well, only people with jobs can actually enter the UAE. So it isn't, so if you're going to stay here long term, you come with a job. So typically, I think banks would fund affordable housing. I don't see it being an issue from a banking point of view. I think banks take this risk across all of the sectors. So, people like me could lose my job, we could leave, and ultimately our mortgage might be might be offset.
Thanks very much indeed. And I was talking to Miguel earlier on from Pacific. He was working in Miami in 2007, and he said people without a job were getting a $750,000 loan. That didn't end so well. So maybe having a job is no bad thing. A couple of quick comments and questions down here, and then the lady on my right over here.
My name is Bilal Moti, and I represent Value Strat Qatar. Excellent show so far. I am more interested to know about REITs, how far we are in the REITs, launch in the market, and what kind of progress development are we going to see in the coming few years.
Thanks very much indeed. Tim, that's yours. That's your MBA thesis. Can you give us the 60-second version of your MBA thesis?
It'd be fantastic if Dubai can become a base for the REITs. Look, some of the big limitations are that a lot of corporates just hold on to their real estate. Typically in any other market, established market, they'll do sale and leasebacks. So probably the challenge which I put out there for a lot of the corporates is to probably dispose of some of their assets which are at lower returns on equity and focus that real estate towards some better returns within their actual business. There's still quite a bit of regulation still to go on in terms of being able to develop REITs. There are no REIT regulations on the DFM. We have it within the NASDAQ Dubai, but there's a lot less liquidity there. I understand the regulations are in a draft form, but once they're actually enacted, it'll be hugely beneficial in terms of the DFM.
And would your fund convert to a REIT, do you think? Is that conceivable down the line?
Well, look, our fund's an open-ended fund, and typically right around the world, open-ended funds in time convert to REITs. You saw it in America, Australia. It's just a typical transition. So.
Thanks very much indeed. I think we have a question from the very far end of the room. Yes, please. Gentleman with his sleeves rolled up. He means business. Yes, sir.
Dr. Asim Al-Haj. I'm surprised that nobody has mentioned the oil price impact on the industry. I would like to know the panel views on that, whether the industry has overcome the issue.
Thanks. I'm going to put that question to them. It's a great question. Tariq, as a developer, oil price impact?
It's funny you mentioned that, actually, because there are two viewpoints. And when we launched our project, we had people coming to us and speaking with them. Some of them have the viewpoint of, I don't want to buy right now because of the oil price. Others are saying, oil's going down, I need to put my money someplace safe. So it depends on what your viewpoint is. So it's not just necessarily people with a negative view on a lower oil price, or if it is a negative view, they're looking for something with a decent yield.
Ronan, very quickly on that for you. I guess when we talk about international institutions having appetite for emerging markets or not, or the Middle East or not, something must happen in the psychology of the senior guys at Standard Chartered in Singapore, London, or any other big financial institution. If they see oil going from 110 to 40, head office of a big bank must think, not sure about the Middle East right now. A light must go on or off.
I think, yes, commodities have been a focus for banks for the last 3 or 4 months. I think the amount of credit reviews that are going about commodity-related exposures, it's not just oil, has been extensive. That is across all of our footprint. So that's something that's ongoing. Here, you have a surplus. You've had a historic surplus. So I think that the supply-demand has been very much in the focus that there's been more supply, as in there's more liquidity. That liquidity coming back, I actually think will be good for the market because it'll mature. So my view and our view, I think, is that the oil price will help the maturity of the UAE as a state.
Thank you very much indeed. Final question.
Well, actually, It's not a question, it's a comment. My name is Maysa Sabah. I'm the GCC Managing Director of the Affordable Housing Institute. So I would just like to make a few quick comments to add to what the panelists have already said about affordable housing. Now, first with regards to the...
You've got about 60 seconds.
Long-term affordability, inclusionary zoning, even in Abu Dhabi, they have a requirement that units have to be affordable for at least, I think, a number of years, but as Greg has mentioned, the legislation has some issues. Now, an interesting thing that we have seen in Dubai very recently, there's a small developer, and he's having actually a session 2 days ago, in the next 2 days, in Cityscape. He launched a small project, it's like all about maybe 30 units, but part of a number of these units are going to be sold to impact investors or investors who will buy these properties knowing that they cannot sell them and they cannot increase the rent on these units for 3 years. So the rents have to be stabilized, and he thinks that this way he is contributing to addressing this affordable housing issue. The last point, going back to the question of does affordable housing does it have to be far away? In the US, this is referred to as like drive until you qualify phenomena. No, it doesn't have to be this way. And again, we go back to inclusionary zoning. When you mandate that developers have to have a certain percentage of the development dedicated to affordable housing with some incentives, of course, then you will automatically have units all over the city.
A great way to finish. Thank you very much indeed for those comments. And thanks indeed to all of your contributions today. And of course to our panelists. First of all to Dua Dablan. You took the brunt of the questions and thank you for answering those. Appreciate it from Dubai Land Department. Let's show our appreciation to all of our panelists.